Good evening, everyone. Can you hear me? Please kindly unmute yourself and answer me if you can clearly hear me.
Yes, I can hear you.
You can hear me?
Yes, I can hear you.
Yes, Ryan, we can hear you.
Great. Just a moment. Let me set up things. Great. Oh, what's happening? Okay, good. And please, can you see my screen?
Yes, please.
Okay, great. Great. Yeah, so good morning, good afternoon, good evening. Please, can the person unmute him or herself? The one with... I hear someone speaking French. Please kindly unmute yourself. Okay, so good morning, good afternoon, good evening from wherever you're listening to me from. Today is week 1, day 3 of our Fund Mastery Bootcamp. My name is Ryan Gaba, and I'm excited to take you on this session of week 1, day 3. Today's session, would like to look at what we studied yesterday. Yesterday, I had a privilege to work hand in hand with my brother Osajifo to share nuggets on trading and fund management. Okay, so briefly, we'll just look into what we did, a little recap of what we did yesterday. Then we zoom into what we have today. Okay. Okay, so yesterday we looked at Forex trading in general. We first looked at trading in general. Yes, we looked at, oh, sorry, my friend. So back to what I was saying. We looked at trading. We also looked at what Forex trading is. We looked at Makola KJTR scenario. We go to a local market, okay, items. Okay, so that's what, please, can you hear me? Hello, please, am I being heard? Okay, so I proceed. Yeah, so after looking at what generally trading is all about, which is buying and selling of items, okay, then we also looked at what Forex trading is, okay, yes, and we also spoke about Forex trading to be the buying and selling of currencies, okay, yes, and also looked at it from the aspect of it being one of the most liquid markets globally, okay? And when I say liquid markets, or when I talk about liquidity, I'm talking about the monetary aspect, okay? So Forex is one of the markets, okay? Or it's one of the industries with a lot of funds, or yeah, it has a very huge, liquid, yes, it has over trillions, trillions and trillions of dollars, circulating in and out. Literally, that's what I'm trying to say. So we have lots of monies, okay? And when we talk money here, mostly in forex trading, we like to use dollar. So trillions of dollars circulating in the market on daily basis, okay? Then we also looked at the history behind Forex. Okay, Forex didn't just appear, or Forex didn't just come out from nowhere. It started from somewhere and evolved over time. So we looked at the history of Forex. We also looked at what can be traded. Yes, why? Because we don't always trade currencies, or we don't only trade currencies when it comes to Forex, okay? So we looked at certain things or certain instruments and derivatives that can be traded in Forex. And we mentioned some to be commodities, and commodities, we mentioned some as gold, crude oil, and natural gas and coal, okay? Then we also looked at stocks. Then we also looked at major stock indices like the S&P 500, the US 30, and so on and so forth. We also looked at cryptocurrencies, and we talk about cryptocurrencies. We all know Bitcoin. If we don't know any cryptocurrency, we all know Bitcoin. We all know, I mean, some of us know Ethereum, we know Litecoin, but we know Ripple, and so on and so forth. Okay, and we also looked at ETFs, exchange traded funds. We also looked at futures and contracts. We also looked at CFDs, yes, which we traders normally, I mean, trade. Most traders trade CDFs. And when I say CDFs, I mean contracts for difference. Yes, we also looked at options yesterday. Then we also looked at fund management. Okay, yeah, who really, I mean, what we look at fund management, who a fund manager is, someone who manages, I mean, funds, okay? Yes, then we also looked at certain key aspects of fund management, such as asset allocation, portfolio construction, risk management, performance monitoring, sorry, and reporting, okay? We also looked at what? Adherence to investment strategies, okay? We looked at regulatory compliance, and my brother Osajifo did a good job on that for us yesterday. Yes, then we also looked at types of funds that can be managed. Okay, we looked at mutual funds, hedge funds, pension funds, ETFs, that's exchange traded funds. We looked at sovereign wealth funds. We looked at private equity and capital and venture capital funds. Okay, then later we looked at the importance of fund management. Why is it important to manage your funds? Or yes, and we looked at one being professional expertise. We looked at another being risk management. We looked at efficient asset allocation. We also looked at achieving financial goals. We looked at diversification. We looked at the time-saving component. We also looked at what? Transparency and reporting. We looked at what? Regulatory compliance. Yes, because in every industry, I mean, there are rules and regulations that what govern activities in that industry. So we looked at that. And aside all of that, we also looked at certain trading goals. In trading, like any other venture, yes, or any business, okay? Please, can anyone hear me? I see internet unstable here. That's why I keep asking, can you hear me? Before I proceed, can you hear me? Okay, so I believe everyone can hear me. Then we move on to what I was talking about, setting trading goals. So like in any other industry or any business venture or anything, you just don't go in with no plan, with no, I mean, goals. Not you go in definitely with goals. You go in with a plan, okay? So unlike trading to, you have to set goals, and we looked at some goal settings as defining your objectives, okay? Yes, so defining your objective is very crucial when it comes to trading, okay? Yes, you must set certain objectives like, oh, I want to earn $50 every week or every month. It's an objective, okay, which is also achievable. Then we look at the SMART framework, okay? And when we say the SMART framework, it's actually an acronym. So the S in the SMART stands for specific, okay? So specific being that, yes, your goal should be specific, okay? As I initially said, that I want to make $50 every week from trading. It's a specific goal, okay? Then we also look at the M factor in the SMART framework. And the M factor stands for measurable. Okay, so yes, our goals should be measurable. It should be measured. Okay, as I initially stated, that I have to what? Make $50 a week. It's measurable. I've given myself, a time frame to meet. Okay, yes. Then when we look at the A component in the SMART framework, it has to do with yes. So the A aspect has to do with is it achievable? Okay, is your frame, what's the name? Is your goal achievable? Your goal should be achievable. Okay, yes. You can't set unrealistic goals. You have to be realistic about this whole, Forex trading approach. Okay, you can't tell me you want to use $100 to make like $1 million. It's not something that is achievable. Okay, then we look at the R component in the SMART framework, which so the SMART framework, the R component is it should be reasonable. Okay, it should be reasonable. Okay, your this thing, what's the name? Your goals should be reasonable. Okay, yes, you should be realistic, or you can even use realistic, the word realistic in place of reasonable. You should set realistic goals. Okay, yes. So an example of that too is I want to make $50 a week. It's very realistic. If I say I want to make $500,000 a week, it's not realistic. Okay, then we look at the T factor in the SMART framework, sorry, and the T factor has to do with the time frame, or it's time bound. Okay, so every proper goal should be what? Time bound. Okay, then we also looked at set short-term and long-term goals. Setting short-term and long-term goals. Okay, it's very crucial when it comes to trading. Then we look at focus on process goals, not just outcome goals. We should not always be fixated on the outcome. We should also focus on the process. Yes, because we have traders that are so focused on what's the name? They are so focused on the profit aspect. I want to make this, I want to make this. So they start doing certain things that they are not supposed to do. They don't follow plan because they are their minds are fixated on what's the name? Profits, or making or achieving, let's say, something that is not too realistic. Okay, let me put that way. Then we also looked at tracking and adjusting your goals regularly. Yeah, because from time to time, you need to track and adjust your goals because the market changes from time to time. Okay, yeah. Then we also looked at stay realistic and avoid overambition. Yeah, staying realistic and avoiding overambition is also very crucial when it comes to trading. Okay, yeah. So with that being said, that was what we covered yesterday, okay, concerning trading, Forex trading, and fund management. So we want to delve into what we have today. Yes, and today we'll be looking at fundamentals of market dynamics. Okay, fundamentals of market dynamics. Okay, so when I say market dynamics, how do you understand market dynamics? Can anyone unmute himself or herself and try to help us out here? Market dynamics. What do you understand by, or when you hear market dynamics, what comes into your mind? Can anyone help? Okay, so when we say market dynamics, okay, we are talking about certain factors, okay, that affect the market, okay, certain events that can affect the market. And a very good example would be Good. Let's use Doomsaw era. Doomsaw era. Okay, before Doomsaw, were people really buying, what's the name? That thing, that
Nose mask.
power bank. Good, power bank. Were people buying power banks? Were people really buying generators? Before Doomsaw, let's be realistic here. Before Doomsaw, were people buying power banks? Were people buying generators? No, we weren't really buying power banks or generators, but it actually got to a point where when this Doomsaw became very serious, now people are rushing for what? Power banks. People are rushing for what? Generators. Okay. Why? Because there has been an event that has what? Affected the market. So dynamically, the market has changed. The market of not buying generators has become everyone needs a generator. The market that, no one was really interested in buying power banks. Now everyone wants to buy power banks. And when things like that happen, okay, there's so much demand. Okay, so when it happens that way, prices escalate. Okay, then another example we can also look at is COVID. During the COVID era, before COVID, how many of us even knew nose masks? How many of us even knew sanitizers? We are not using sanitizers. We are not really using nose masks. Okay, but when the outbreak of COVID, came, what happened? People are rushing for nose masks, sanitizers, and their prices started escalating. Okay, yes. So literally, these things I'm mentioning or these scenarios I'm making makes us understand what market dynamics really is. Okay, and in trading, before we start anything, we would have to, like in any other business venture or anything, okay, there are certain terminologies, there are certain jargons that we always use, okay? So in trading too, the same with trading, we have certain terminologies and jargons that we use, okay? Yes, so today we want to take some time to know some terminologies in trading. And on my screen, as you can see, we have what? Currency pair. Okay, the quotation of two traded currencies. Okay, yes, and we are seeing an example the euro dollar. So in Forex, we can't just trade one currency. Okay, there must be two currencies. Okay, imagine going to a market and seeing only people selling, no one buying. There's no trading going on. Okay, because in a market, what is expected is people are there to sell and people are also there to buy. So that scenario also works with Forex trading, okay? You must have two currencies before trading can really happen, okay? There must be two currencies, okay? And normally the first currency is called what? The base currency. And then the second currency is called what? The quote currency, okay? So looking at what we have there, Euro USD, base currency, quote currency. So I place a picture here. I think this is covering the picture. Let me try to shift this. Great. Please, I hope you can see the picture on the bottom right corner. Yes, my mouse is hovering around it. So that's it. Euro being the base currency and the US dollar being the what? Quote currency. Then quickly we would like to look at what pips is. Percentage in points. When we say percentage in points, pip, what does it mean? Okay, and the definition here is what? The smallest price movement in a currency pair. Okay, great. So with this, great. When you are driving, okay, from one distance to another, we measure it, okay? So pip is also like a unit of measurement, just like driving from, let's say, Accra to Koforidua. Driving from Accra to Koforidua, someone can say it's 20 kilometers, okay? Or 5 miles or something, okay? So that's the unit of measurement from Accra to Koforidua or Accra to Kumasi. And if you walk a certain distance, or let's say, yes, maybe you need 50 steps to walk a certain distance. You need 50 steps. So the number of steps you have to take is the unit of measurement, okay? Yes. Then let's say you are measuring the length of a table or the width of a table. You need to use a tape measure, and you'll be measuring in inches, centimeters, or something. That's also what? A unit of measurement. So just as we have units of measurement in certain things, we also have the same in Forex trading. And our unit of measurement in Forex trading is the pip. Okay, so we can see here. Okay, before I even go to this, generally, when it comes to trading, prices, when it comes to trading, you see the prices, the fourth decimal place is usually where we start counting the pip from. The very fourth, so I'm using my mouse around it, the very fourth decimal place in most currencies, okay, like the euro, dollar, euro, dollar, this is EUR, USD, whatever you're seeing there is euro, dollar. This is Great British pound, US dollar. What you're seeing here, AED, USD, is Aussie dollar, US dollar, okay? So the figures highlighted in green, are called pips, and they fall on the fourth decimal place, okay? But there are exceptions, and those exceptions normally work with the Japanese yen pairs. Any pair with Japanese yen, mostly the prices come in some few decimal places. So normally the second decimal place, okay, the second decimal place is where we start to count the pips. So that's what is quoted in green on my screen, okay? And it's the same with USD JPY, Euro JPY, GBP JPY. It's quoted in green. And we can also see some quoted in yellow. The ones quoted in yellow, we call them pipettes. Pipettes actually is like an offspring, a smaller version of the pips, okay? An example can be how we have minutes, okay? We can say minutes. With minutes, its smaller version will definitely be seconds, okay? When we come to timing, yes, so that also relates with pips over here. The smaller version of pips is what? Pipette. Yes, then I proceed to the next. We are talking about lots or lot sizes here. And it says what? Lot size or lot is what? A standard unit size for a trade. A standard unit size for a trade. So with lots, I have this scenario I would like to use as I want to use that scenario to relate to lots so that you can understand what I'm saying. Okay, we all know we have gas cookers at home. We have gas cookers at home. What happens when you increase that, that knob, the knob that we used to increase the temperature of the gas. When you increase the temperature, what happens? Whatever you are cooking gets ready earlier because the temperature has been what? Increased. When you decrease it, it takes time, okay, for whatever you are cooking, to get ready, okay? It also relates to, what's the name? Lot sizes. So literally, lot sizes is the volume at which you want to enter a trade. The volume at which you want to enter a trade. So if you are using a very low lot size, you are either making very little profits or very little losses. And if you increase, okay, your lot sizes, you are either making very huge profits or you are making very huge losses. That's all we have to know about lot sizes. Then we move on to the next slide, leverage, okay? So what is a leverage? Over here, it says what? Borrowed capital that allows you to control larger trades with a smaller deposit, okay? So it even explains itself. And an example is even here, 1:100 leverage means $1 controls $100, okay? So with leverage helps you to gain more funds, okay? It multiplies your funds in Forex trading. We always need leverage, okay? So I'm sure most of you created an account with HFM and you were asked to deposit $10. So that $10 you have in your HFM account with a leverage of 1:100, a leverage of 1:100 will make that your $10 $1,000. Okay, so yes, you deposited $10, which is small, but that $10 can't really do anything on the market. Okay, $10 can't do anything on the market. So leverage here, I mean, multiplies that $10, I mean, to $1,000, so that, I mean, you can either buy or sell on the market. Okay, so that has to do with leverage. Then we have here margin. Great. Before I even talk about margin, let me take this up here. Good. So margin, the amount required to open a leveraged position is expressed as a percentage of the trade size. Okay, yes. So margin works hand in hand with leverage. Okay, so we can see a picture below here. My mouse is hovering around the picture. It states here without margin. Okay, without margin, you've deposited 130 US dollars. Your exposure in the market is still $130. Why? Because there's no margin. Okay, so whatever you deposit is whatever you're exposing on the market. Okay, but when you have margin, you see this picture with margin. My mouse is hovering around with margin. You deposit as low as $1,300, and your exposure on the market is $130,000. Please, you understand? So margin, hand in hand with leverage, it's kind of, it escalates, I mean, your trading, I mean, potential, or your deposit. It expands it. Okay, yes, it makes it huge, so that, I mean, you can trade on the market. Then I have a picture here, and I place this picture here because it's one of my swing trades, though. Yes, it's one of my swing trades. I'm even currently in this trade, but I had to put it here because I'll be using this, even going forward, I'll still be using this picture to explain one or two things. So here we can see the margin here. So that's why, I mean, I brought it here. We have free margin, we have leverage. We'll still understand more of that, but let's move to the next slide. We'll still come back and make reference to this, what we have here. Okay, so we go back, or we go for it, sorry, to spread. Spread. What is spread? Spread is the what? The difference between bid price, into bracket selling price, and the ask price, which is what? The buying price. So actually, spread is just the difference between bid price and buying price. Okay, yeah, we have a picture here to, I mean, depict what we mean by that, and we are using Euro USD here. This is the price of Euro USD, which is the bid price. Okay, and it's also the base currency. When we were talking about currency pair, we mentioned base currency, Euro USD, bid price, and this is the price. And we have what? The counter currency, which, I mean, is USD. Okay, when we're talking about this, or that's a quote currency, when we're talking about what currency pair, that's a quote currency, which is what? There's a price, that's the ask price. Okay, so just subtracting it, whatever you get, the outcome is what? 2 pips. So 2 pip is the spread. 2 pip here is the spread. So that has to do with spread. Then we move on to bid and ask price. Okay, so when you say bid price, the price at which the market buys from you. Okay, and when we say the ask price, it's what? The price at which the market sells to you. Okay, so over here we have a picture here, which is showing GBP USD, pound dollar. Okay, GBP USD means pound dollar, the pound dollar market, and this is what? A bid price. Okay, a bid price being what? I mean, what the market wants to buy from you, and what the ask price being what? What the market wants to sell to you. Okay, then we move into, great, we move, let me move this, other types. We have other types.